Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of How to Use RSI in Real Life, brought to you by Jeremy Alexander Newsom. That's me. Hope you guys are doing absolutely fantastic. It is indeed an exciting night and day, if you're in another part of the world, to talk about an indicator. So last webinar we did on indicators was on Bollinger Bands and just kind of discussed how Bollinger Bands work, what I use them for, and in that topic, let me actually just hop over really quick to the chart and look at one of the reversals that we got based on what we talked about last week, which was Cooper, ticker symbol COO. So check this one out. So Cooper, right, based on the Bollinger Band reversal that we discussed last week, or if you're watching this on a recorded version, just the last video that you were checking out, it gapped down, right, opened outside of the Bollinger Band, got a big white bullish candle, closed as a white candle, and then traded higher. So on that particular day, we were looking at going bullish and actually did set up a day trade, which didn't work. We got out very, very quickly. It was actually a bearish trade because my thought was if it's going to roll over, it's going to roll over now. And of course, if it doesn't roll over, then it's probably going to go bullish. So it did actually end up popping bullish, trade up into some targets, and it hit target one for me today, which was 135.18. Robert Meek was also looking at this particular trade based on the exact same thing we talked about. So looked at the last two times, really the last three times that the stock did the gap down and open and close below the Bollinger Band. There was one, there was one, there was one, and there was one. And they all worked for, a quick little pop bullish. So that Bollinger Band reversal can work and often does work pretty well. So hope you enjoyed that video. This video might be a little bit quicker because I do use RSI. One of the reasons I use it is really for more of an introductory level for traders. And I help them see the momentum that a stock might have based on RSI. And RSI stands for Relative Strength Index. That's what RSI is. So what I'm going to do is I'm going to pull up that indicator right now for you and pop over here to RSI. Now, if you have a charting software or a broker, it depends on the broker and, of course, the charting software that you have in regards to how it sets up, what it looks like, and how to use it. But really, you should just be able to right-click on settings or indicators and just try to find the RSI. So again, if you're using TradingView potentially, you can right-click, slide down here to where it says Insert Indicator, click on Indicator, and you can search for them, or you can kind of scroll down and I think relative strength, boom, there it is right there, relative strength index. And obviously you can just go in there and add and select and all that kind of good stuff. So that's the RSI setting, and that's the RSI indicator. That's where you can go find it on TradingView. Again, other brokers or other charting softwares, it just really depends on what the broker is or how it sets up, but that's how you would go in and find it, I guess, depending on the broker, of course, or charting software. All right, so let's talk about the settings. That's what we did with the Bollinger Bands last time, which is really so far only indicator class was the Bollinger Bands. And I don't use indicators that much. The indicators that I do use is often just kind of saying, hey, well, maybe this is what could shape up or what could happen. And maybe it's a little bit of an additional piece to see what something may or may not do. I oftentimes will check out an indicator. So the settings for RSI, there are obviously many, many settings to use. If you're day trading or shorter term trading, you're going to be using a smaller number. So RSI is an actual oscillator, right? It oscillates back from high to low, so it kind of goes like this. And the high price usually starts at about 70, and the low usually starts around 30. Sometimes it can be 20. So those are ranges that usually are pre-built in from your charting software or your broker, the actual high or low settings. The number 9 that you can see right here on my chart where it says 9 close is it takes the last 9 days and with the term relative strength, it compares the stock's strength or momentum to itself for the last 9 days or 9 trading sessions or candles if you're day trading, or again, longer term trading. It's just all about whatever time frame you're using. So you can come in here on TradingView And you can obviously format it however you want to. Again, if you have another broker or charting software, you can also do this. It's very simple. But 9 is the length that I use. You can do the open, high, low, close. Again, you can change all of that. You can change the length. If you're day trading or, again, shorter term trading, you normally are going to have a little bit of a smaller number to get more, to get more touchy-feely is not the right word, but more responsive, right? The smaller the number, the more responsive the actual indicator is. Let's talk about the ways I use the RSI indicator. One of the ways, and I was mentioning earlier, is I like to use it for beginner traders to kind of help them understand what it means when a stock might slow down or pause. At this point in my trading career, I can get a feel for what a stock might do just simply based on experience. I'm not saying that to impress you guys. I'm just saying if you do something long enough, you can kind of get a gut feeling or an instinct on what a stock may or may not do. The RSI indicator is one of the only indicators that I use that shows me when a stock might slow down, pause, or rest. Now, knowing that internally that it might do that is fine. Obviously, it makes common sense that if a stock is really, really just going strong, it's going to pause or rest at some point, right? Stocks are not going to just move straight up. Stocks aren't just going to go, straight up in the air, horizontal or vertically. It just doesn't happen, right? So a pause at some point is beneficial for the stock. The RSI indicator is one of the few indicators, really the only indicator that I like to use that helps either new traders or myself be able to anticipate when a stock might slow down. What do you guys think? The gentlemen that are here, what would be the reasoning that it would be good to know when a stock might slow down or pause? What do you think, Niels? Why would it be good to know if a stock is going to slow down or pause? Well, it depends on your strategy, I would say. One thing that could be interesting about knowing or understanding or expecting when a stock could slow down or pause, maybe you're in some shares and you want to do a covered call. So if the stock is trading up, so if we're looking at the chart, the stock is trading up, pausing, and you think to yourself, okay, well, this is going to pause here, that will be a good time to do a covered call, right? You are able to let the stock trade sideways, be patient, and you sell a call above where the stock is trading to bring in some premium, and hopefully it expires worthless, and then the trade continues. Neil said you could take profits. Yeah, absolutely. So if you say to yourself, I need to pay my car bill, right? That's what real life trading is all about, figuring out how to take the stock market, analyze it, and then make some boom plays to make a little bit of additional money to pay off a credit card, pay off your car loan, mortgage, student loans. Maybe you want to buy a present for your girlfriend or your husband or whatever. If it's a really quick trade, so on Amazon, for example, let's talk about this particular setup. Bullish retest gap, right? White candle, gaps up. Here's the retest. The candle that occurs on the 26th of October was the new white soldier, which is a white candle that opens and closes above the black candle's close. So an entry and stop could have been just like that, and bam. There's your trend, and there's your paying off some student loan trades right there. That's a really good 50, 60 point move. That's pretty significant. So now let's ask ourselves, what about RSI? Well, RSI gets into the 80s on Amazon, up into the 80s. So anything above 70, you should really kind of start expecting a slowdown or a pause or a rest. If it starts getting into the 80s or even higher, maybe it could be 81 or 85, then you're really anticipating a rest. So if RSI gets that high at this particular point in time, I personally would suggest not buying something on a stock, especially if it's an all-time high, if the RSI is at that level. So if RSI is at 80 and the stock is at an all-time high, or if the stock is obviously in a bullish trend, what do you guys think that I would say if I'm analyzing that particular stock? I'd say, well, we should probably wait for a pullback before we buy this trade. And we did. So there's the pullback that occurred. I mean, it's a pretty big pullback. That's about a 30-point, almost 40-point pullback on Amazon. And notice what RSI did. RSI was able, along with the stock, to pull back. Now, obviously, as you all are aware, I am a full promoter that the stock and the candle price, the price action does control all of the movements of the indicator, right? Indicator is just something that is based off of the price. So the indicator doesn't tell me that the stock's going to go down, but what this indicator does say is, hey man, if you're looking to go bullish, you should probably let this thing rest. It's very similar to the RPM machine on your car. You guys know how it gets red right over here? I guess it might depend on what country you're in. But if it's like 5, 6, 7, 8 or whatever. So this is revolutions per minute, I think. So if your engine gets into the 5 or 6, it starts, it gets red. Type it in one if you guys are following me. I hope I'm talking about the right thing. But, it gets into the red zone, if you will. So you're not going to keep your car in the red zone very long because, it could break something. Might not be super good for it. Maybe it expends a lot on gas, on fuel, or it's just bad for the motor if you keep it revved up too long. That's pretty much what RSI does for me. RSI is saying, well, if your car is really, really revved, maybe you need to take a break for a second, pull off the gas, let it calm down before you hit the throttle hard again. It works the exact opposite as well. So again, in brokers or in your charting software, you may or may not have the ability to change the setting on the RSI. If you change the high or the low setting, so right there on TradingView, you can put that on the top or the bottom of your screen, this little arrow right there. But again, 70 and 30 are the high and low points. So if it's above 70, you're more or less going to think to yourself, okay, it needs to rest, it needs to pull back, I'll buy the bounce. If it's below 30, okay, if it's below 30, the exact same thing is true. You would say, all right, the stock is sold off. It's pretty well on its way to needing to pause a little bit. So if you're looking to get in bearish on a trade and the RSI is really, really low, case in point, let's just check this part out right there. So notice RSI had gotten down to the 30 level. Amazon had traded up to this resistance. Right, came up to the resistance, the same resistance that it failed over here, same resistance that it failed over here, pulled back, RSI got to the 30, and then the very next day, boop, a little bit of a new white soldier candle. So if you're planning on going bearish at that point, you probably would have waited since RSI is at 30, and you would have said to yourself, all right, well, it's obviously low, maybe I wait for a pullback, maybe I wait for a retest, maybe I wait for something to give another signal on Amazon. So had you been looking at that particular trade, you more than likely, if you were looking at going bearish, would have said, okay, I got a nice white candle coming in. This is a retest. I need some lower lows and some lower highs before I go bearish. Or on the flip side of that exact example, you could have also said, well, Amazon is making a higher low. RSI has bounced off of 30. I have a new white soldier. Granted, the risk to reward from here to here may not be super impressive into this resistance, but could I at least be more bullish to neutral based on the fact that it bounced off the support, a little bit more bullish to neutral, anticipating a possible bounce? My argument would be yes. Now, when I say bullish to neutral, that's all about your strategy, right? If you own shares, if you're bullish to neutral, you could be doing some covered calls. You could be doing some option strategies like bull put spreads or put sales, or you could be doing a bull call spread, which is a debit spread. There's a lot of other things you could do, but really RSI is a good indicator to kind of help just, for the beginner trader who may not be able to really feel or understand the candles, you can just kind of help and use RSI to determine should you be buying or should you be selling here. So for example, on Amazon, again, right here, black candle, black candle, stock gaps up. Boom. Stock gaps up. RSI on that day was, when the candle opened, was at 85. 85 when the stock opened. So granted, even though someone has, let's say gone through a lot of the real life trading videos and said, man, Jeremy, that's a black candle and the stock is gapping up. That should be a gap and go. The trade should continue higher. However, RSI is at an 85. Could that give you reason or intuition or premonition or maybe just an additional check mark in your trading plan to say, you know what, I'm going to wait for a pullback before I go bullish? And again, I would argue, yeah, absolutely. And that's what we did on Amazon. I did not I actually shorted Amazon that day. I did not play it bullish because not necessarily because of RSI. But I had the understanding or the experience that this is a really, really strong bullish move already. And then the fact that the stock's gapping up about 100 points, really right at 100 points, was a little bit too high for me. So I did not go long and allowed Amazon to pull back a little bit. Simple as that. What are some other stocks you guys want to look at on RSI? I'm going to show you another cool little trick on RSI in just a moment. But what's another stock that you find folks want to look at? Ranjeesh, what's going on, my man? How's it going? Ron, Niels, anything? I mean, Niels is here. I guess he always likes looking at Skyworks Solutions. So let's look at Skyworks Solutions really quick. And let's talk about this particular trade. So Skyworks Solutions, this is going to be fun. I'm going to pull up two of the trades. I'm going to pull up Bollinger Bands really quick for just a moment and talk about this particular trade on the Bollinger Band. So again, stock gaps down, opens below the band, and closes with a bullish candle that day. So shows you a little bit of a reversal potential, right? That's what we talked about in the last indicator class. Well, if we come down here to RSI, notice RSI, your relative strength index, was also at the 30 level. So RSI was down here at the 30 level. Skyworks Solutions had a big white candle. Could that have given you the understanding that we could either A, bounce there, or B, this could become a really good support level for a bullish to non-directional strategy? Maybe like a place to sell puts right there. So it's kind of putting the money where your mouth is. So this trade was one that we got into not too long ago. And again, it's not a bank robbing kind of trade. You're not making insane money on that. But based on this short-term support right here, and here's my little trick on RSI. RSI was actually making higher lows. So when the stock was making relative lows, RSI was making higher lows. When the stock and RSI have different peaks and different valleys, I call that, and other traders call that, divergence. So that gave me enough information. The divergence, the RSI, the RSI and the stock divergence, the fact that you had a really, really strong support at 71, and the fact that you had a little bit of a morning star reversal pattern right there, gave me enough information to say, all right, I feel pretty comfortable selling a put here at $70. If you only did one contract, the amount to control or purchase or get put 100 shares of Skyworks Solutions could have made $60. Again, I realize you're not just absolutely robbing the bank with that particular trade, but that could just be maybe a free $60. If you have a smaller account, that could be kind of a good thing. So what now, Newsom? What now on Skyworks Solutions? Well, again, RSI is getting to the overbought level. Let's say SWKS pulls up in here into $92 and RSI is at 75. Would I go bullish? Probably not yet. No. I'd probably wait. I would likely wait for this, which would cause RSI to pause, and then I would buy the bounce off of that old resistance, new support. Now, in that specific example, you could have said, well, Jeremy, I could have known that without using RSI. And I agree with you. No question about it. I mean, I'm happy to teach anyone at any time how they can trade without using indicators. But again, for a newer trader or a brand new trader out there, RSI can be a useful indicator just to give you the idea of when you may or may not want to buy or sell a particular trade. If you have any questions about that, you're welcome to email me, of course, at any time. If you're watching this as a recording, my email is jeremy@reallifetrading.com. If you are a brand new trader and you're like, hey man, I'd like to share with you some trade setups per my RSI setup, I'm happy to do that. Whatever is good for you, whatever helps you learn and understand, I'm always here to help, folks. So just throwing that out there. Ron says, how about CRM? CRM. I'm actually in a swing trade on CRM. I will share that with you. Let me post it. So while we're here, I'll just go look at it. And let's talk about what CRM could do, or what it might do, or what it looks like it is doing. So we're going to use CRM, which is Salesforce. I'm going to leave RSI here on the screen. Before I talk about what it is, let's go share with you my older trade setup on CRM. And it was right here, posted 7 days ago. Okay, so here's the potential swing. So at the time, let's just do some analysis, 7 days in the past. So the analysis on this particular trade, you have a black candle, stock gaps up. What kind of gap is that on Salesforce? Black candle, stock gapping up. Yes, that is a bullish gap and go, absolutely. So bullish gap and go, I was pretty bullish on that day, didn't get into anything. However, stock pulls back a little bit and we get a doji on November 30th. I like to doji. I like to doji. So we get a really nice doji. Next candle is a nice new white soldier, which is a white candle that opens and closes above the prior day. Black candles close. So it makes a higher high and a higher low. It's bouncing off the gap and it's bouncing off the moving averages. That's pretty much enough information for me to say I'm going bullish. So I had this trade set up, 81.17 by 78.99. So hopping over now to present day ticker symbol CRM, we can see when we got into that trade, RSI was about 59. So pretty much what it is now. Right now, RSI is at 57. So my question to you is, let's say you're not in this particular trade. If RSI is anywhere below 70 and above 30, that shows you that that's pretty much a neutral ground. That stock has momentum to do pretty much anything. And that's the good news with and using RSI. You want to know, can this stock move? Does the stock have enough momentum to do something? Now the question of what is it going to do is still based on gaps, candles, volume, and location. But if you've already determined that and you just simply want to know, can the stock move farther, using RSI, in my opinion, will allow you to be able to understand, does it have the momentum or the energy needed to move in the direction of the trade. So really anywhere between the $70 and $30 level looks pretty nice. Let's also hop back over here to RSI. And let's look at the times that RSI did come down to this $30 level and see if these were some good buying opportunities. So even though CRM was trading, in my opinion, pretty dead flat sideways, there was one buying opportunity, and here is a second buying opportunity on earnings. Now, I agree with you that some of you are like, Jeremy, there's no way you would have picked the bottom on Salesforce in August. I disagree with that. Is there a candle, ladies and gentlemen, on Salesforce around that time when Salesforce and RSI had about a $30 reading? What is that candlestick pattern at that support level? When RSI is at 30, after earnings comes out. One white soldier. Yeah, it's a one white soldier candle. There it is right there. It occurs on August 26th. So notice your relative strength index gets a little bit of a double bottom. Again, here's another little bit of a double bottom on RSI. So that's one of the tricks I was just about to tell you. Here's your one white soldier, out of support, out of trend line, buy city, right there on CRM. So if you're a swing trader or a longer term trader, I think that'd be a pretty good place just to say, all right, well, I'm going to buy CRM. You'd be up almost pretty much $20 on a $60 stock. I think it's about a 30% return. I mean, that's pretty spot on. So one of the ways you use RSI, or one of the ways I use RSI, is to find out, is there enough momentum for the move? Does it have gas in the tank? What does the RPM look like? Are the revolutions per minute, are they in the red? Does this car need to slow down? Or are we kind of cruising at the nice 2-3 level that most people like to, be at their car? So right now in CRM, I may or may not get stopped out of this trade. I truly do not know. There's nothing we can, once you get into a trade, there's nothing you can really do. But RSI at the moment looks like it's neutral and could pop at any moment. So what I was going to mention on chart patterns on RSI, the double bottom chart pattern, or the double bottom drawing on RSI is one of my favorite patterns to use. So there's your double bottom, and there's the bounce on RSI. There's your double bottom, there's the bounce on RSI. Obviously, you're not going to get tons of them, but if you get that double bottom pattern, if you get the double bottom pattern that happens near a support on the stock price, or it happens at that $30 RSI, or I'm sorry, not $30, 30 price RSI reading, sometimes I can give you a really good indication that it may bounce there. And the 9 setting does work pretty often for that. So those are really the 3 ways. I'm going to get into the other one in a moment. Momentum, or as some people like to refer to it as MOMO. Number 2 is the RSI double bottom. And number 3 is the one that I touched on just a moment ago. But the third way I use RSI, and this is probably the biggest reason that I use it now, because I can't really understand and see this based on the chart. So I do like to look at this on the indicator from time to time, is divergence. Ron says, I got stopped out of my CRM option today because I was trailing it too tight. Sorry about that, man. It happens. Happens to the best of us. Yeah, he's on CRM. So we've been into the trade for about 5 days now. One of the biggest parts of the plan, or my trading plan, or other trading plans that does help me, is I like to kind of write in there oftentimes how long I have to be in the trade before I can move anything. Sometimes 5 days is a really good window, meaning you can't move the trade, you can't move the stop, move the target, move the trigger, you can't do anything for 5 days. Once you get in, let the trade do whatever it's going to do in 5 days. That can oftentimes be a really, really good just window, number 1, to make you more patient. I spell it P-A-Y. It can help you make you more patient, and oftentimes it can reduce the number of times that you get whipsawed out of a trade from trailing your stop too tight, because it really sometimes just comes down to patience. I'm not gonna say this trade works, Ron. It really could roll over, but if the trade does work, you'll end up kicking yourself. And the only way you can control that is to control you. And that's the hard part of trading, because we want the trades to work immediately. But let's say that you were trading this with fake money. So let's say this was 2014 and you could just press the play button to see where the candles go before you moved your stop. You'd probably come to find out that you'd be in this trade for, 2.5 months. And that's kind of a big realization. That's the word I'm looking for. It's a big realization if you go back and you ever back trade any of your stocks to find out how long you're in a trade before the trade either A, works, or B, before you move your stop or move your target. And you can kind of create an average of how long you're in a potential trade when you back trade, and then bring that over to real life. A little bit of subliminal advertising. But yeah. No, I appreciate you sharing that with me, man. So that's CRM. So I still got the stop there. And again, you absolutely could be right. It really could roll down. But if it does, I'm okay with this. This is 1 hour of risk, and we'll see what happens from there. So again, the 3 reasons I use RSI. And again, for newer traders, this can be a really, really helpful tool to figure out, should you be getting into this trade or should you be waiting? It can be a really good tool to help you with your patience. Number 1, momentum. Number 2, the double bottom. Now, some of you might say, do you use the double top? Not as much. I like to use the double bottom more. I don't know why, but I prefer the double bottom rather than the double top on RSI. If you want to use the double top, I'm sure it works. But I've just had so much success with the RSI double bottom that I don't really use the double top. I'm also a perma bull. Have you guys ever caught on to that? Now here's what's weird. Long term, I'm a perma bull, which is the way you should be. If you're a perma bear, it's just a matter of time before you go broke. Simple as that. Perma bulls, you last a long time. Right? Protect yourself, maybe make a little bit of money, don't lose much on the down days, or the down weeks, or the down years, and over the long period of time, everything will be okay. Because the economy and the markets are supposed to go up. But when I day trade or short-term swing trade, and when I say short-term swing trade, I mean like hours to days, maybe a week max, I'm a perma bear. If I'm day trading, I can count on the number of one finger how many bullish trades I've taken this month on a day trade level. I just like bearish trades because they happen faster. Anyway, I like the double bottom. So 1, momentum. 2, the double bottom, aka chart patterns. And 3 is something called divergence. And this one can be a little difficult for newer traders, but I'll pretty much make it to you this way. The stock and RSI should be doing the same thing. If they're not, something is up. I think that's the easiest way for me to make it, for me to make that simple. So the stock and RSI should be doing the exact same thing. So let me hop back over here to Salesforce and just look at this for just a moment. And let's ask ourselves, from here to here, the stock made a higher high. Would you guys agree with me? Stock made a higher high. So did RSI that same time make a higher high? And the answer is yes. Okay, from here to here, the stock made a higher low. Did RSI make a higher low? And the answer is yes. So no real divergence there. Niels or Ron or Ranjesh, throw a stock at me. We'll go see if there's any divergence on it. Give me whatever you guys want to look at. Intel, INTC. Okay, Intel is probably going to be a good one. So Intel, let's check out Intel. So we have a high here on Intel and we have a high here on Intel. They're about the same. The exact same high on Intel. Ladies and gentlemen, do we have similar highs? Yes or no? And the answer is no. No, we do not. So this would be, in my opinion, I would call this bearish divergence. Bearish divergence. And I'm going to put it to you this way, very, very simple. Remember my number one favorite way to use RSI is momentum, or MOMO for short. If you have a divergence, momentum is very suspect. It's very questionable. So if momentum is questionable for me, that means I'm definitely going to be more patient on the trade. I'm definitely going to wait longer on the trade, and I'm probably not going to take anything anytime soon. So Intel, bullish at 35.46 and a stop at 33.73. Do you guys think I like that trade, love that trade, or it's only okay? My ranking is only okay. There are probably a little bit better trades out there. Now, yes, it is making higher lows. But since it's an okay trade and we have pretty obvious divergence on the RSI, I'm going to keep waiting. And the longer it does this, the more excited I'll become about it, because then the pressure is building and it's ready to pop. It allows the momentum to calm down and then gives us a new signal to buy. Now on the longer level, if you go from here to here, again, make these higher lows, or from here to here on RSI. RSI works better on about a 1 month time frame when you're looking at divergence. You don't want to go too long, like from here to here it's about 2 months. So it's a little long for me to call that divergence. I would really say from here to here, boom, and it made a higher high, and that's okay. So from here to here, another month, stock did not make a higher high on RSI. So again, all of this momentum right now is pretty suspect to me on Intel. So all that says, if I own shares here, what could be a strategy if you're thinking to yourself, man, this momentum looks a little weak. We're obviously already at a resistance. Are there any strategies that you gentlemen know about that you could implement here? Neil says covered call. Boom. That's one. So if you had shares, you could do a covered call. You could get a collar set up. So you could have a trigger to buy some protective puts if it rolls down. You could do a bear call spread. Or one of my favorite strategies, you could do nothing. Right? The covered call is only if you have shares and maybe don't mind, getting exercise and you have enough shares to make it worth your while. Otherwise, you can just do nothing. Let's go check out Tesla. Ticker symbol TSLA. And Tesla. So here's a stock and here's the stock. Here's a high and here's a high. There's the high on RSI and there's the high on RSI. Is the stock and RSI both making higher highs? And the answer is yes. Are we making, is the stock making higher lows and RSI making higher lows? Yes. So could you say there's no divergence on Tesla? I would agree. There's no real divergence. So if Tesla pulls back and you look at RSI, and RSI begins to bounce around, I don't know, 50, 47, and Tesla begins to bounce around that level, could you say to yourself, all right, I'm at least more bullish than bearish? What do you think about that, Rajneesh? Could you at least come up with a theory that I'd be a little bit more bullish than bearish? There's no divergence. RSI looks fine. Have plenty of room to move. And if you look at just plain candles and charts, you got some support here, some support here. So you would say buy the bounce, right? If the stock pulls back, buy low, sell high. Boom, you got yourself a little bit of a setup. Activision, ticker symbol ATVI. Now, again, if you are watching this recording, here's the cool part. Go back and check your charts with the analysis that I'm doing right now to see did it work or what would it have done. Anytime I ever watch any other educator or stock market guru out there, I always go back and look at the charts to see what he's saying, if it worked. I'm sure you've thought about that, but if you haven't, just something to consider. All right, so Activision Blizzard. So here's a high on Activision Blizzard. Notice where this stock was. So right there before earnings, the stock was RSI was at an 83. So could you have said to yourself at that particular point, RSI is very, very high. Again, maybe as a newer trader, so as an experienced trader, there's no way in the world I would buy right there. And I'll tell you why in just a second. But as a newer trader or as a trader in general, could you look at the RSI setting and say, you know what, I'm going to be really patient right there on this trade because RSI is so high? I would say to that, yes. I'd be very patient, buy the bounce. So here's the pullback, and here is the RSI, doobly bootumly, the double bottom. There it is, and there's the pop. So that's the place to get in an Activision. Not right there. Now, I know you're saying, Jeremy, this is hindsight. You're using the charts to your advantage. I realize that, but 3 months ago, or 3 weeks ago, or whatever, it's the same analysis that I had. The reason I wouldn't have bought there, more or less, unless you gave me the money to do it with, notice the trend. Look at where Activision has moved from. It went from $25 to $36 in 2 months. I'm not the greatest at math, but that's a $15 move on a what's once was $25 stock. You guys get what I'm saying? That's over a 50% growth in 2 months on a big company. Not like a random pharmaceutical penny stock, but a really, really big company. So anytime a stock moves that far, you've missed the trend. If you're not in it, there's one thing you can do, and that would be buy the pullback or wait for the bounce. So RSI right now, let's look at this. So we got this peak and this peak. So the stock is making higher highs, and right now RSI is not making higher highs. So what do you find folks think my analysis would be on Activision at this particular point in time? So you have bearish divergence. The stock is at an all-time high. RSI is already at 70, which, as we've been discussing today, is a pretty high point. So you got a lot of signals that go... So Ron says, don't buy now. Yeah, exactly. It can give you the understanding of saying, hey, don't buy now. Be patient. Buy the pullback. I'm okay with buying the pullback because, Ron, dude, you're spot on. This is absolutely in a bullish trend, and a very nice bullish trend at that. So if we're looking at the charts, the trend is just going banana sandwich. I mean, it is really, really just rocking to the moon. Stock's almost at $40. All-time high. Bearish divergence on RSI. RSI divergence is already at the price where it needs to rest a little bit. So you would say to yourself, wait for the pullback and buy the bounce. That's pretty much about it. Ron says, good analysis. Thanks, man. I appreciate it. Anything else? All right, awesome. Well, RSI is, again, a little bit of a, I keep saying a beginner indicator. It's really not that much of a beginning indicator, but it really can help just say, be patient, or is this a good time to buy? Does it have the momentum? So right now, you look at it, and even if you just looked at nothing else other than this $70 price range, you go, okay, it needs a little bit of a pullback. That alone should just say, or to tell you if you're a beginning investor or a long-term investor, hey, just be a little bit patient. Let's wait for a pullback. Let's do one more, and I'll have you guys wrapped up. Here's USO. So USO, the United States Oil Fund, had a little bit of a support right there. It broke support, and now RSI is down in the $22 range. So remember, $30 is where you're expecting a little bit of a market bounce or a little bit of a stock bounce potentially. So anytime, now I'll use this as an example as well, but anytime the stock is in this low level, which is often referred to by other companies or other names or other teachers as oversold and overbought, I just call it weak momentum in both locations. I don't say oversold or overbought because it's not oversold or overbought. It can keep going. I just say weak momentum. It just needs to slow down, right? Think again back to the RPM analogy. If you're hitting full throttle, you need a little bit of a rest. So what does that mean in regards to our analysis? Well, USO is pretty much at like a 10-year low. I don't think this is an all-time low, but it's at a very, very low level. RSI is at a low level. The momentum is weak down here. So would you take a breakout or would you kind of wait for a pullback? And my thought process would be if you're bearish on USO, I think you're absolutely choosing the right direction, but short the pullback rather than the breakouts. So short the retests, let it trade up higher before you short it. So notice right here, the stock's already moved 3 points on the $14 stocks, moved pretty well. So let's say USO does this. Would this be a good time to short? Or let me ask that question better. If you went short right there and placed your stop here, would you be following the direction of the trend? Yes or no? I think the answer is yes. You'd be trading the direction of a trend. I know it sounds simple, and in a way it really is. You've heard the term, the trend is your friend. If you trade in the direction of a trend, the probabilities are on your side. From there, ladies and gentlemen, you can increase the probabilities to get them higher and higher and higher. But at some point, you've got to take the trade. You've got to plan to take the trade. And then once you're in the trade, once you've planned to take the trade, once you're taking it from your plan, you hear the term plan a lot, mitigate your risk, follow your plan, and then hopefully the trend will make you money. That's really all you can do in trading. Really, from a simplistic standpoint, you can have sideways trends, bullish trends, or bearish trends, but at some level, you've got to find what direction is the trend going and give it a shot. Right? Mitigate your risk. If you're wrong, be wrong. Move on. A lot of traders stay wrong way too long. Don't be wrong too long. Okay? If you're wrong, you're wrong. Get out. Do some analysis. Maybe ask around. See what else is out there. And then kind of go from there. So that's my analysis on USO. Bottom line is bearish. Short the pullback. And we're looking for some more lows on USO. This is probably going to be longer term. Again, this just comes from a little bit of experience. But this is probably the last stretch of this move. And we'll probably get into the $10 or $9 region at some point, and then start to bounce longer term. Again, just my guess. Obviously, oil's not going anywhere, but if it starts to bounce down there long term, put that in your 3 to 5 year bucket of set it and forget about it, and be prepared for energies to do whatever energies are going to do. Because in my personal opinion, and again, this is just purely an opinion, I think oil and energies are about to enter an accumulation phase, but they will not be a pretty accumulation phase. It really will be a 3 to 5 year. If you have some shares, don't expect anything from it. Put it in your, I don't care. I'm not taking this trade for money. I'm not taking this trade to pay any bills. This is a longer term buy and hold. I'm trying to do smart money, thinking contrarian type of portfolio. Type in a 1 if that makes sense for all of you who are here right now. And again, that's just my opinion. I could be wrong, but there's a lot to support that. Well, boys and girls, traders from around the world, thanks so much for being here, for watching this video and coming to the webinar, or watching this recording, how to take and how to trade and how to use RSI in real life. If you have any questions, again, feel free to email me anytime, Jeremy at reallifetrading.com. My Twitter handle, if you ever do the Twitter thing, is @NewSomeNuggets. Hop over to the website anytime, reallifetraining.com. We're also on Facebook. Make sure to subscribe to us on YouTube. Do the whole social media thing. We like to get out and about and enrich lives. Of course, after all, that is our mission. Ladies and gentlemen, thanks so much for being here. I absolutely appreciate it. I'll send you on your way. Have an amazing day, evening, night, afternoon, week, weekend, month, year, century, decade. Love you guys. And until next time, remember, love life, live life, and trade it. See ya.